Most people think their credit report is just a number. It's not. Your credit report is a document and it has 4 distinct sections, each one telling lenders something completely different about you. Most people only ever look at one of them, and the sections they ignore, those are often the ones that determine whether they get approved or not. Think about the last time you applied for credit, a home loan, a car loan, a credit card. The lender pulled your credit report, they reviewed it, and they made a decision, sometimes in minutes. Most people have no idea what was actually in that report when the lender read it. They know their credit score, but the score is just a summary, a snapshot. It's the headline number calculated by the credit reporting body using the information inside your report. The report itself is the full story. And if you have never read your own credit report, you are essentially walking into a job interview without knowing what's on your CV. The lender knows more about your financial credit history than you do in that moment. If you're new here, welcome. I'm Nova. I've spent over 15 years inside the banking industry as a credit risk professional. Earlier on this channel, I did a video on credit scores, what they are, how they are generally calculated, and what actually moves them. If you have not seen that one, it's worth watching alongside these, because today we are going one level deeper. We are going inside the actual credit report, the document behind the credit rating and the credit scores. Everything I share here is purely for financial education and is not meant for personal financial advice. My goal is simply to help you understand how the system works so that you can navigate it with confidence. Now, there is one section of the credit report I want to come back to specifically later in this video. It's the one most people have generally never heard of. And once you understand it, you will look at your credit report completely differently. But first, let's start at the beginning. So what's a credit report? A credit report is a record of your credit history. It's maintained by credit reporting bodies, and when you apply for credit, the lender pays to access a copy of it. Your credit score is generated from the information inside the report. Change the report and the score likely changes with it. This is important because most people focus entirely on the score and never look at what is actually driving it. Here is a useful way to think about it. Imagine your credit report is your financial passport. The score is just the photo on the front page. Every lender flips past that and reads the detail inside. There are 4 broad sections of interest in that passport, apart from your credit rating or your credit score. And each one tells a different story. Let me walk through each one. I'm going to go from least understood to most important. So stay with me to the end, because the last one is the one that catches most people off guard. And I have categorized them into 4 just for ease of remembrance. So the first section contains your personal information. It contains your identifying details, full name, date of birth, current and previous addresses, employer information, and identification document number. It sounds straightforward, and mostly it is, but here is why it matters. If this section contains errors, wrong address, misspelled name, incorrect date of birth, it can cause your identity to be confused with someone else's. In some cases, a lender's system may not correctly match your application to your credit file, which can delay or complicate an approval. It can also be an early indicator of identity theft. If you see an address you have never lived at or an employer you have never worked for, that warrants investigation. And a few years ago, while reviewing my own credit report, I noticed that the address listed wasn't correct. And that one was on me because I had moved to a different house and forgotten to update my details with the bank. And at that time, I remember thinking, I really hope none of my documents have gone to the wrong address or fallen into the wrong hands. But the practical takeaway, every time you check your credit report, start here. Confirm the basics are correct before you look at anything else. And the second section is about the credit inquiries. This is a section most people partially know about, but do not fully understand. Every time you apply for credit and a lender pulls your credit report, that pull is recorded here as a credit inquiry. It shows the date, the type of credit applied for, and the name of the lender. One or a few inquiries is normal, it's expected, it has minimal impact on its own, but here is what matters most. Multiple inquiries in a short period of time, say 4 or 5 applications within a few months, creates a pattern. From a lender's perspective, that pattern may raise a question. Why is this person applying for credit so frequently? Are they being declined elsewhere? Are they in financial difficulty? They cannot know the answer just from looking at the inquiries, but the pattern alone can influence how they read the rest of the file. I once spoke with a friend who was genuinely just comparing home loan rates. They applied with 4 different lenders in 2 weeks to see who would offer the best deal. Completely logical thing to do, but by the time they finally sat down with the lender they actually wanted, that lender could see 4 recent inquiries on the file and asked additional questions about why so many applications had been made in such a short period of time. It did not stop the approval, but it created friction that would not have been there otherwise. The smart approach, and this is something yourself or even a broker can help you do, either search online and use available comparison tools, or even use a broker who can shop the market on your behalf with a single inquiry rather than multiple individual applications. Inquiries stay on your credit file for 5 years from the date of application. The third section is credit accounts, your repayment history, and financial hardship information if you're in Australia. This section is where the detail of your borrowing life lives. Under comprehensive credit reporting, your credit file captures significantly more information about your credit accounts than it used to. Previously, credit files only recorded negative information, defaults, missed payments. Now they record both the positive and the negative information, which means this section shows the type of credit accounts you hold: home loans, personal loans, credit cards, BNPL accounts, including for companies in which you are a director, the credit limits or balance on each of them, the credit provider, the dates the accounts were opened and closed, and crucially, your repayment history, whether you are paying your facilities on time, month by month. And this last part is significant. Consistent on-time repayments build a positive repayment history that lenders can now actually see and factor into the assessment. It's no longer just about avoiding the negative, it's about actively building the positives. But here is the flip side of the same coin. If you are regularly paying late and your credit provider reports it as a late payment past the grace period to a credit reporting body, that pattern is now visible too. Not as a default listing, but as a repayment history that shows inconsistency. And in Australia, financial hardship arrangement is also reported. This is an agreement between you and your lender to adjust or defer your loan repayment obligations because something has happened which has had an impact on your ability to repay your facilities. Financial hardship information is only retained on your credit report for 12 months, after which time the information is removed from your credit report. And as I conclude this section, I just want to say that multiple open accounts, even if all are performing well, tell lenders something about your existing commitments. They factor that into how much additional credit they are willing to extend. And this is also where buy now, pay later accounts now appear for providers who report to credit bureaus. If you watched my recent video on BNPL and credit file, this is exactly the section where that information lands. And there's a fourth section, the section I mentioned earlier that most people have genuinely never heard of. I call it adverse information section. And this is the section that contains the serious credit events, and understanding exactly what goes in here and what the rules are around each one of them is one of the most practically important things you can know about your credit report. There are several types of adverse information that can be listed here. There are payment defaults. And this is a formal listing that an overdue debt has now been formally recognized as default. A default stays on your credit file for 5 years from the date it was first listed. Then there are court judgments in this section as well. If a creditor has taken legal action and obtained a court judgment against you for an unpaid debt, that judgment is listed in this section. It stays on your file for 5 years as well. Then there's bankruptcy and insolvency. These carry different listing periods depending on the type of event. Then there are serious credit infringements. This one surprises people. A serious credit infringement is a serious indicator of bad conduct by a debtor. It can indicate that the credit provider considers the debtor has acted fraudulently, such as lying about their financial situation when applying for a loan. It can also mean that the credit provider believes that the debtor has intentionally failed to comply with their credit obligations, such as moving address and failing to tell the credit provider, and yet they have defaulted on repaying their loans. In Australia, serious credit infringements can stay on the credit report for 7 years. Here is what most people get wrong about adverse information. They assume that once they pay a debt or resolve a debt, the listing disappears. Paying or resolving a default updates the status of the listing. It changes from open to paid or resolved, but the listing itself remains on your credit file for the full 5-year period from when it was first recorded. And as I always say, a resolved default and an open default are read differently by lenders. One shows a problem that was addressed, the other shows a problem that wasn't. Both are still visible during the window. And I covered these in detail as well in my write-off video. The one situation where you can seek removal of the listing is if it was recorded incorrectly, wrong amount, wrong date, or without the required notices being given. In that case, you have the right to raise a dispute directly with the credit reporting body. So, what can you do with this information I'm sharing? Now that you know what's in your credit report, here is what to actually do with that knowledge. Step 1, get your credit report and read all the 4 sections. You're periodically entitled to a free copy of your credit report from the credit reporting bodies. Accessing this free report does not affect your credit position in any way. And the second step is just start with the personal information section. Confirm your name, address history, and identifying details that they are correct. Any error here is worth correcting before it causes a problem downstream. And the third step is that just review your inquiry section. If you're planning to apply for a home loan or a major credit product in the next, say, 6 to 12 months, be mindful of how many additional inquiries you accumulate before that application. And the fourth step is that just check your repayment history. Look for any accounts showing irregular or late repayment patterns. If you see something that doesn't look right, an account you do not recognize, a limit that is incorrect, note it and raise a dispute with the relevant credit reporting body. And the fifth step is just read the adverse information section carefully. If there are any listings here, defaults, judgments, or infringements, and anything has been listed incorrectly, you have the right to dispute it. The process for doing is available so directly through each credit reporting body's website. And step 6, if anything concerns you, get independent guidance. And this is worth saying clearly. A lot of what I have covered today is not hidden information. It's publicly available. In Australia, there's Credit Smart. And as I close, I just want to say that your credit report is not just a score. It's a 4-section document that tells lenders the full story of your financial life. Understand what is there in each section. And if something looks wrong, you have the right to address it. If this gave you a clearer picture of something that directly affects your ability to borrow, share it with someone who needs it. And subscribe, because next week we are going into something that builds directly on these.